UPST has been showing a lot of weakness within a longer term bearish trend, down 15.07%. This is Wednesday, the 5th of November, 2025. Yesterday, the 4th, it printed an intraday low of $38.1. Yeah, you can see the downtrend. I think especially since last week, that is from Tuesday the 28th, it's just been lower prices. It has been printing so far so good. The algos have this got today's extrapolation correct. It's going to be down today. Yeah, it's going to be down today surely. I doubt if it's going to erase this 15% loss in this when the market opens later on today. Okay. Outside that, projections are currently saying 49.34, 45.5, 45.57, for 6.83, 60.80, 63.25. Okay. Based on what we have on this daily chart, which hasn't really reflected this 15% drop, but we can still look at it anyway. Yeah, it's saying that yeah, at some point a bounce may kick in, momentum may also pick up based on what we have for on its price pressure momentum indication here. Momentum may pick up, and at some point the price may challenge its 10-day moving average, but not sufficiently, so in the short term there is a trade there, there's a trade there, there's something, possibly something out there for UPST, but just in the very short term, and there's no guarantee that it's going to happen. We are looking at we're looking at so many days ahead. A lot of things can happen between now and then. Let's see. Yeah, you can see it's a high beta stock, so a lot can happen. Let's just have a look at its 4-hour chart to see what's going on. Okay, this is the 4-hour chart. It has This is that 15% decline. Okay, it's saying that it's going to maybe begin to pick up some strength. Yeah, by midday today, and yes, saying that it may be able to break through its moving average, its 10-day moving, 10 period moving average by Monday. By Monday, there's it's saying that it may have it may do so. Momentum is expected to begin to pick up. Okay, well, so it's supposed to be it's expected to break through that moving average. Sorry, the 10 period moving average by midday tomorrow. By midday tomorrow, and maybe hold it up till and stay above it up till maybe let's see, up till Monday. Yeah, okay. So in the interim as well, there seems to be a trade that is possibly out there for UPST, but all in all, it's a distributive contraction that is still projected, nothing to the upside. Projections are currently saying 46.41. As of yesterday midday, had the same 46.41, 51.88, 54.63, 56.34. So positions opened all the way back to 800 hours ago are not in profit. So the 10 and 21 period moving averages, they are both severely bearish. Yeah, and yeah, some buying has kicked in. Yeah, driving the okay, yeah, some buying has okay, some buying has kicked in, but momentum has not improved. So buying, yeah, some buying has kicked in, but its selling pressure is still very much prevalent. Yeah, still very much prevalent, and the pace is the selling pressure is also. I mean, everything is getting worse, but people are still buying anyway. They're still buying anyway, regardless of the weakness that is going currently afoot. Yeah, okay. 99,000 shares have crossed the tape, not a lot, but still, this is still the pre-market session. Yeah, okay. So the stock, yeah, is equally trending. Let's find out what's going on with the stock. The company discloses its earnings outcomes and much more.
Upstart is back in focus as investors dissect its latest earnings results and the company's long term prospects amid a challenging macro environment. Despite a sharp year to date decline, Community sentiment remains split between cautious optimism and renewed skepticism about the company's fundamentals. Earnings and core business debate. Upstart's recent earnings painted a mixed picture. While the company demonstrated modest growth in loan originations and improvements in operating efficiency, profitability remains elusive. Bulls argue that Upstart's AI driven lending platform positions it well for the next credit cycle, potentially improving margins and reducing default risk as models mature. Bears counter that the company's reliance on partner banks and loan sales exposes it to liquidity pressures, particularly when risk appetite among investors tightens. Many community members are questioning whether Upstart's core business model can sustain growth without over leveraging its balance sheet, especially as the company continues to hold more loans on its own books, a move that amplifies both earnings potential and credit risk. Investor concerns, management, valuation, and risk. Investor discussions are increasingly centered on management strategy and how effectively leadership can navigate the current economic climate. Critics have raised red flags about the company's ability to control exposure to rising delinquencies, potential overvaluation despite significant share price declines, and the limited diversification of its loan categories beyond personal and auto loans. Some traders believe Upstart is trading more on hype than fundamentals, with its AI lending narrative losing traction as macro pressures mount. Short squeeze speculation and rate cut optimism. On the bullish side, a subset of retail investors are watching for a potential short squeeze setup, pointing to elevated short interest and recent volatility. Optimists argue that if interest rate cuts materialize in coming quarters, it could improve loan demand and ease credit conditions, sparking renewed interest in high risk growth names like Upstart. Others note that the stock has a history of sharp rebound rallies following extended sell offs, suggesting that even minor catalysts, such as improved credit data or a favorable Fed signal, could fuel a temporary surge. Macro and sector backdrop. The broader fintech sector remains under pressure, with concerns about rising defaults, tighter lending conditions, and weaker consumer credit quality weighing on valuations. Upstart's performance is being viewed as a microcosm of fintech's growing pains in a high rate environment. Community discussions have also touched on potential government shutdowns, macroeconomic uncertainty, and even market manipulation narratives, as retail traders question whether institutional shorting and low liquidity are exaggerating the stock's downward momentum. Outlook, high risk, high potential. For long term investors, Upstart remains a high risk, high reward play. Its AI driven lending model could redefine consumer credit if the company manages to scale efficiently, reduce default risk, and achieve consistent profitability. However, in the short term, economic volatility, rising delinquencies, and persistent skepticism from Wall Street could keep the stock under pressure. As the next earnings cycle and potential rate decisions approach, the key question for investors remains: can Upstart turn its innovative model into sustainable profit, or will macro headwinds and market distrust hold it back? Key takeaways: stock down year to date, but still heavily discussed due to volatility. AI driven lending model divides opinion, innovative but risky. Loan portfolio exposure and management strategy under scrutiny. Short squeeze hopes rise with elevated short interest and rate cut speculation. Fintech sector weakness continues to weigh on valuation sentiment.
Okay, so thank you very much for watching this video.